Good morning. Today is the 19th of October 2023 and I'm going to go over my levels for today. Just quickly look at the economic calendar just to see what's going to make the market move today. We've had some data in at 8:30, we saw a bit of movement, but the important one is not until 12 o'clock, and that is Fed Powell speaking. So if you're in a trade around 12 o'clock, then keep an eye on it or get out. I've set a reminder on my Alexa to let me know there's something going on at 12 so I don't forget. I don't want to be trapped in a trade where it goes through my stop or something. You see, all today we've got lots and lots of Fed speaking, so a bit like yesterday, maybe not be a very good market to trade in. So I'm going to trade a lighter size today for this exact reason. Probably a quarter of my normal size. That's it really. So anything major, nothing more major, just lots of speaking. So keep an eye on 12 o'clock, that's the one to keep an eye on for, and then we've got every hour, every half an hour throughout the afternoon as well. Okay, so looking at the MES or the ES chart, this is the S&P 500 index futures and the hourly time frame. I've gone back to May right now. For reasons you'll find out, and we're looking at this level here at 43.20, and it's a level I've had in there for some time. And if I scroll back towards recent days, let's just reset it, we had it set at 43.20. This is area of confluence. We've seen it's an area of support and resistance back in May this year, and lo and behold, in the pre-market we came right down and touched that level. So it's created a new support area today, so that's an area to watch. So 43.20, maybe 43.20.50 is an area I'm going to wait for a possible bounce. So I'm going to wait for this area for a double bottom for a bounce. Based on what I'm seeing, I quite like a bit of a long day today, but I won't be biased long. I want to try and play the chart. My next level was going to be the pre-market high, and at the time it was around about this point, but we're right at the pre-market high right now, 43.50, and funnily we're right at a previous level as well, one we've been watching for some time as well, 43.50. So I don't want to call this one right now. It was going to be a potential rejection area and if it is, it'll be a low, a high risk rejection, and it'll be more, in fact the level's broken through now, so it's a matter of waiting for confirmation. And the same down here, we've not been down to this level for some time, so if we go for a bounce, we're waiting for confirmation. And what I mean by that, looking for a bottom tail candle or a hammer candle, and we're waiting for a big change in volume. So we've got average volume here, and we want to see basically the buyers come back in. And when the buyers come back in, you normally see a big battle and big volume, big volume bar. I may even consider a solid green bar as well, on high volume. And then I'll be looking for the confirmation will be the break of that green bar into a breakout. So that's kind of what I'm watching for. That's for confirmation, volume, price, and down at the level. And that ticks one of three of my confirmations I'm waiting for. Three of the few confirmations I'm waiting for as well. Oh, here we go. I said about a rejection. Potentially we're at a rejection area of 43.50 right now. You can see it's an area of confluence as well, where the floor became the ceiling, and potentially it's the ceiling again now. So that's a potential area we can watch for, but high risk because it's so close to where we are. So as for higher probability, we've got this area at 42.77 all the way down to 42.35. It's a big daily demand zone. So we need to find something in the hourly. So I would say the best area will be 42.40 to 42.50, and it will be this area here. And I've marked off an area 42.57 to 42.58 for a potential bounce, and that's basically the shoulders of this inverse head and shoulders pattern. We came back, retested it, we came back, we kind of tried to test it, pushed through, came back, we retested it again there, and it held, and we haven't been back down there for some time. So 42.50, 42.60 area is probably the best place within this daily demand zone. Obviously we've got the tops as well, so we can take that, but again with confirmation. And zooming out a bit more, yeah, that's, if we take the top, we've also got this demand zone as well, so let's just mark that in. So I take it from the previous candle where we had the big move up to the body of the previous change of colour, so that's a demand, that's a hourly demand, and by no coincidence the top of this area happens to be the bottoms of this area, and probably missed this demand area recently when we could have taken a long off of it. But anyway, so let's see where that gives us in recent. Oh, let's come out of that. Right, where are we now? So that puts our demand zone down here at 42.77 through to 42.90 area. So it coincides with this level I've already got in place at 42.99, basically 4,300. Okay, so after that rambling and just a quick analysis, I'm going to be watching 4,300 as a higher probability bounce, so that's what I'm waiting for, that area. And higher probability, even though I'm trading a smaller size today, it'll be a quarter of my normal size. Normally I want to buy a quarter, average in with 3 positions going into that position, and then when it comes out, maybe take one on the exit, or I prefer to take one on the pullback and retest for the other last quarter, and potentially that's a profit taker there as well. So we've got a couple of contracts left we can add, so that's kind of what I'm waiting for. So if we get back down to this level, I probably won't take quarters. I'll probably, because I've limited my size today, I just want to take, maybe I'll take one on entry and one on exit or something like that, and with a stop it will have to be 42.90, which is below the or as close as I can get. I'll look at the whatever candle we put in at this position, the bottom of the pivot with a little bit of a 2, 3, maybe 4 points, 4 ticks away as a stop. So I like a little buffer. I don't want to put my stop exactly on there, because you know how many times it comes back down to that exact level and stop you out. Whereas you have your stop just a little bit below, you've got a little bit of an air gap, and it gives you a bit of room. I've noticed this week as well, some of the stops, and I've been stopped out quite a few times, maybe just need to give it a little bit wider, and possibly the Fed speakers are causing the market just to trade slightly differently. So I might, so if I do come down to 4,300, I might even just allow the whole $10 area as a stop. And as you know, today I'm playing a quarter to a half of my normal size, so that won't be a big loss then. And again, the reason I'm trading a quarter size is because all of the Fed speakers is making the market quite difficult to trade this week. Okay, so that's my main area. So I'll just recap again. We've got 4,300 as a higher probability bounce area. We've got another higher probability but with confirmation, 4,320, and that's a new support level we've put in. But going back almost till May this year, this level has been in play since that time, and we haven't been back down there for at least a month or two. So this is a big area, and in May it was quite a big area as well. So these are my 2 bounce areas. And rejection, I hesitate to say this, but potentially where we are right now is a higher risk rejection, and that's only because we've got that area there as a bounce, which was the floor, now it's the ceiling, and we've got an area of confidence here as well. So higher risk, but it doesn't, I think it's breaking through right now. But this entire area, you know, give or let $4 or $5 either side. Failing that, we've got a higher probability rejection will be this candle here. And let's get rid of these, are some data levels I'm just playing around with. 43.90. Let's just put a level in there. In fact, I prefer, yeah, 43.88 as a higher probability rejection. And we had a poke through there up to the 50 moving average. We had bottoms of candles, bottoms of candles, bottoms of candles, bottoms of candles, bottoms there, top there, so it's a high area of supply. Tops of candles here as well, and I'm sure I can just about see it came through to that level as well. So 43.88, higher probability rejection, and it's in this supply zone as well, this red area. So that's why I like that. And the stop could actually be 4400 or just above 4400, so it's a big stop, so that will have to be played with a very small size, or wait for the market to come up into this area and wait for a turnaround candle, something like this. This is a perfect turnaround candle. So you've got a big move up into the level you're waiting for, and then you've got the topping tail, which shows the sellers have come back in, and this is a nice red candle as well, and then the break of that, and then you can put your stop at the top of that turnaround candle. Again, I want to give it four ticks above as well, just to give it a bit of space. That's $1 on the ES. I think that's it. And obviously 4400 is a big area as well. So if this fails, then I'll look to get in. But in the meantime, I've got these other levels: 43.77, 72, 65, and 56. And I will keep an eye on them because they are potentially rejection areas or break and retest areas, and these are based on previous levels we've been watching as well. And so I may just try to scalp these with a very tight stop, and if it breaks through, get out, scalp it again, tight stop, scalp it again. And this is what I did a couple of days ago where I think it was this one here. I scalped every level on the way up, and as you can see, it's just kept running and running and running, and I eventually went to scalp the top level, and it did okay, come back on me, and I added, and I ran it down. Well, I didn't go that far. I ran it into just a few minutes into the post market, and that one trade alone was, I think it worked out about 16R, and that more than covered all the losses I had going up, all these paper cuts going up. So not everyone likes trading like that, but that's my style of trading, and I'm happy to put a bit of risk on. And when it comes into a better zone, I can't remember the zone I took it now. It might have been, yeah, I can't remember the exact day. It's one of these days where we just pushed up. I think it was that day. It might have been Monday. Yeah. And then I worked out okay. So let's go on to SPY. I'm going to say same levels with SPY as we've been watching, with the addition of this area, which is still an area we've been watching. So again, there's no coincidences that we've got supply and demand zones plotted for the last few weeks, and lo and behold, the pre-market yesterday's low happens to come into those areas. So it just shows that these zones are definitely zones of interest, and the levels do work. So I'm watching 429 for a potential bounce, or maybe I could potentially look at the low, which is 428.62. That's a potential bounce. Let's just add that in. 422, I've got it 56, that's fine. That's just an area. So it's not a line in the sand, it's an area zone. So that's why it's always best to wait for confirmation. So a bounce at 429 to 428, so that's the area I'm watching. And again, originally I had this level set, and this is again going back to last Friday, and it probably goes back to September as well. This area here, which was this little head and, well, it's not really a head, maybe a head and shoulders pattern, but we had the neckline of whatever pattern you want to call, double top. There we go. So we had that area there of interest, and this area here of interest, and we've just broken through it, but we are potentially coming into the 20 moving average now, and we may see a bit of a reject. But I quite like this area here, which is 433.25, 433 area for rejection. Potentially we might see us catch up with the 50 moving average, which is starting to change its direction back down now. And just one thing to note as well, we have a possible change of direction as well. We were in a bit of an uptrend. We broke this area on Thursday, and we've been going sideways since then, and we're putting in like an M dot pattern, so, or a double top. Didn't quite put in a new high, so that's could be a bearish pattern, and we're coming back down, and we've broken the neckline yesterday, and we've been hovering around that for some time. We haven't broken it for weeks, for a week or so, and we're now coming in up to this area to retest it. So potentially we could be looking at a breakthrough and a retest to continue down. That's one scenario. The next scenario is that we come back up and retest this area here, and so the two areas are, that's 433 potential bounce rejection excuse me, and obviously we're watching for a potential rejection. We could still use this demand zone, which is 431.70, but I don't like the bounce rejection there. I want to see a pivot before a big pivot, especially with a big move up. So that this here is an area of supply, because we came in and we saw a big move up, and an area of supply is more powerful on that V shape, this area here, and it would be on an area like this where buying and selling is starting to dissipate. Whereas here the sellers came in and buyers came in strong, as you can see. So that's an area I'm watching, hence why I like 433.25, and that's the reason I use the V shapes for my supply and demand zones. Hopefully that makes sense. Right, okay, that's SPY. I'm going to move on. We've only got 10 minutes to go, so 15 minutes. Qs, QQQ. So again, no coincidence at levels we've previously established, and you note that I don't put them at pivots. I average the areas. I average it in there. I try and find where there could be potentially the most volume, and there's no real method apart from I eyeball the levels. And as you see me do just a few minutes ago, I put my level in. Oh, hang on, let's put that back because I'm going to get to the point. So I just look at pivots. I look at areas where the tops of bodies of candles, and I kind of averaging out where the tops and bottoms of candles would be, and that's my averages. So I'm not on that pivot there or that pivot there. These two pivots, I've used the bodies here, and I use the bodies of this area, and this is why, because potentially we come into an area, if when the market's normally open, I may have some limit orders sitting there waiting for it to come down, trigger me in and push back up again. But you can see it's a significant area, and again, it's not a line, it's just a zone. So it could be this area. You could potentially have used, let's just clone that for example. You could have used that pivot there and the top of that pivot there, and looking back, see, it wasn't really that close. So I think my original method, which I like to use, the eyeballing method, is spot on, and that's just a little wick through, and I quite, yeah, and I think that's the reason I like the way I do my levels, and that's absolutely spot on. Bar a couple of 25 cents or whatever it was, 44.20 cents, but still, that's an area of a new support area now we can watch. So going back to the levels, potential bounce around here, which is 361.60 area, and again, I quite like the rejection of the 200, but we've gone through that. And don't forget, it's rounding off this 200 moving average now. So when it's rounding and flat, it's just not as powerful as when you have a 200 moving average and we're coming into it like that. It's kind of flat, so it doesn't have as much significance. So I'm ignoring the fact it's broken through the 200. We did hold it there. We tried to hold it there and then broke through. We came back, we retested it. But I argue whether that's testing the 200 or whether it's testing that pivot and these levels. So ignoring that rejection area now, unless we put in a bit of a tail right now, we could watch for, when I mean by tail, we could see something like this. and we could look for a rejection back down to this area as a first target and then a breakthrough. But if I had to take a short, see, I quite like the longs today. It's going to be 368 still, nothing's really changed. 368.6 is the level I've got, so that's a higher risk, lower probability rejection, and we've got this area of it's not demand. Let's change that to red. It's a supply area, and so 370.20 down to 370. This is an area I'm watching for rejection, and if I were to put in an area to watch out for, it would be there. And the level I'm looking at is tops of candles, this area, bottoms, and tops. Okay, so that's the Qs. Nasdaq. Right, I want to be done now because I like to have 10 minutes just to go through my levels and just make any refinements. Nasdaq, very quick again. We've got the bottoms, this new area we just put in recently. So what's that? 14. So okay, I didn't realise this until I just looked. We've broken 15,000, but we couldn't stay below it. So that's still an area to watch for a bounce. I quite like this area as well, which is around 14,940 to 950 area. But I think the bottom of this green supply demand zone, we could potentially watch for a double bottom round here for a push back up. So that's one area to watch, and then the next area, we couldn't break through it here, so maybe I'm going to hold that area again. So 15,000, 15,165, this area for potential rejection, and that's basically the bottoms of these candles, tops of these candles, bottoms of these candles, and tops of these candles, and area confluence. A relatively high congested volume, and then the next area is going to be 15,300, and happens to be where this higher congested volume is, and I'm going to say that area there. And again, higher volume, and it's the tops and bottoms of candles, and I would probably like, probably there, that area there. That's what I like. 15 to 15,300 basically. And then finally, crude oil. Oh, I had a few doubts yesterday. I was a bit gutted that I got out of my swing trade when we saw the big push up, and I got out of my swing trade about here. It was exactly on that candle, and I doubted it, thinking maybe I should have held on to it a bit longer. But especially when I saw yesterday push up, this is a head and shoulders pattern here we're looking at on the hourly, with the, again, no coincidence that the head neckline happens to be an area we've already defined. And so we got tops of candles here. Yesterday it came down, tried to come into that area, put the head in, come back down to create the neckline area, another head, a neckline area again, and today we've broken through. Look at that, we've actually tested all the levels which we've previously put in. And again, you can just play these levels, go long, go short, go short, go short, go long, you know, with a little bit of draw, you know, maybe stop out, go long again. You go short. Maybe I should take a leaf out of my own book and actually start playing these levels better. But you can't get any more exact than that. 84.49 was the level I had, and this candle went to 80. What's the low? 85.43. Is that right? I'm not sure I can. It can be higher than 85.43. There you go, and I had 85.49. That's not bad, is it? Within a few cents. And again, this candle here, it went to 80. I had a level 86.69, and the high was 86.84. So a couple 20 cents out. Again, these levels work pretty well, and you can see it setting up the zones as well. So we've got the bottoms of candles here, bottoms of candles here. So that leads me to levels. 86.70 is still 87 maybe maximum, but 86.70 is a rejection, Potentially there's an hourly sell set up, break of this candle which we've broken, and for a move back down. And then we can watch the neckline 87.80 again. No coincidence that these levels come in play. And then we got the head now, the new level from day ago, 88.60. So we could potentially watch a rejection up there. But we're still in an uptrend on oil. Putting in a higher high, higher low, higher high, higher low, higher high, higher low. There's no signs that it's reversing yet. If we can break this level, then we can continue the trend up, and we've got some levels ready in case we do. Okay, that's finally that. I think that's it really. So maybe I should have held on to my oil, but it's only a week contract, so I got out at the right time. I got out when it came back here. I got in around here, out up here, and it probably would have its value would have got that word I'm trying to find, declined over the last few days anyway. Okay, that's it. Just quickly go back to MES. Just a warning at 12 o'clock that Powell speaking. So a bounce here and a bounce at 4300 and a bounce at 4320 area. And we got look, I said about the rejection, and if we rejected it, 4350 rejection. Damn, spot on again. And then we got higher risk rejections before we get up to 43.77 and 43.88 and then the neckline at 4400. So there you go, level proves it's working still. What a rejection. Right, thank you for watching. Don't forget to hit the like button, and see you tomorrow 8 AM. No, 9 AM Eastern time, or 2 PM here in the UK. Okay, thank you for watching.